BlackRock making the announcement with $10 trillion in assets. BlackRock isn't just another name in the investment game. With over $10 trillion in assets, the company is the largest asset manager in the world and possesses incredible financial clout. Founded in 1988, BlackRock has since redefined much of the landscape of investment management. If you keep an eye on the financial markets and financial news, you'll definitely notice the name BlackRock. BlackRock was the innovative idea of Lawrence D. Fink, who possessed unwavering faith in the potential of technology and had one of the sharpest eyes for innovation in today's industries. The financial wizard's humble beginnings and ascent to the pinnacle of investment fame make his story nothing short of a Wall Street epic. He is regarded as a game-changer whose innovative investment ideas have set new standards for investors throughout the globe. Born on November 2, 1952, in Venice, California, Lawrence Douglas Fink comes from a middle-class background in sun-drenched streets of California. It was here that he first realized that acquiring financial acumen and putting in a lot of hard work would be essential components of his success. Venice is worlds away from the high-pressure financial districts around the world where his future would eventually unfold. He attended the University of California, Los Angeles, better known by its abbreviation UCLA. He didn't just focus on academics. He threw himself into every class, majoring in political science and going on to earn an MBA with a focus on real estate early on. This showed him a talent for navigating complex systems and sparked his interest in the finance industry. After he finished his studies and allowed the academic dust to settle, Larry wasted no time in discovering the financial world, first at Boston. This firm served as a test for his subsequent career and was also where his financial abilities were initially identified. He began overhauling the Mortgage Bank Act Securities Division shortly after joining it, propelling the divisional business from a standing start to an astounding $1 billion in profit. However, this voyage wasn't without its difficulties. The first Boston loss left a lasting impression on Larry's perspective on and approach to business. It became his personal mission to establish an investment company that could withstand the kind of significant loss he experienced on a risky investment. This event marked a turning point in Larry's career and taught him a harsh lesson about the critical nature of risk management. Volatility of the market, and achieve this by having a steadfast dedication to technology and strict risk management in mind. This company would not only respond to the current financial climate, it would also anticipate storms and decide in advance how to navigate them. However, the goal behind founding BlackRock was not only to learn from the past, it was also to democratize investing and make it clear and understandable for investors of all backgrounds. In Larry's vision, the business would provide a stable haven in the volatile world of finance, utilizing cutting-edge technology to deliver insights and analysis formerly exclusive to elite investors. By this point, Larry had 3 razor-sharp tools in his toolbox: the insightful lessons he gained from his early career setbacks, his natural inventiveness, and his goal of founding the largest asset management company in the world. He then set out to assemble a strong team of people who shared his vision, and it's crucial to note that BlackRock may have been the inspiration for this. But the team that actually made it happen started in 1988. Well, officially anyway, this was not only the year of the Colossus's birth, but it was also the start of a revolution led by Lawrence and his visionary co-founders. The 1980s saw rapid evolution in the global marketplace, a sharp increase in the use of technology, and new approaches to navigating the complexities of investment management and the market. Larry was motivated to create a company that could be a bulwark against market volatility, since he had personally witnessed the effects of inadequate risk management. His secret sauce was superior risk management combined with an uncompromising commitment to technology. The second obstacle was persuading potential clients and the wider market of the viability of Finn's fresh approach to investment strategy and management. This proved to be more difficult than he had anticipated at the time, as the financial markets were dominated by established players. Larry's idea of founding a company that prioritized technology and risk management was far ahead of its time. However, the obstacles kept popping up and multiplying in those years. Financial acumen alone was not enough to launch an ambitious venture like the one Larry had in mind. He needed financial backing. The phrase unproven was often used on Wall Street during that time when discussions centered around thinking, but it only strengthened his resolve that their approach would be proven successful. Among the important co-founders who worked with Lawrence in the early going were Susan Wagner, who designed Blackrock's risk management platform called Aladdin, and Robert S. Capito, who went on to become Blackrock's president and play a significant role in establishing the firm's client-focused culture. All of the co-founders shared Larry's vision of using analysis technology as a primary lever to provide clients with unmatched insight and stability. In the end, Blackrock evolved into a comprehensive risk management platform that could handle a wide range of risks across asset classes and provide previously unheard-of levels of security. In the process, the company redefined what it meant to be an investment management company. Even the name Blackrock, which was chosen to represent strength, integrity, and stability, qualities that the founders deemed essential to their new enterprise, was a reflection of Larry Finn's early vision. Blackrock initially concentrated on fixed income assets. Because of the founders' combined experience, the firm was able to provide clients with previously unheard-of insights into the bond market. They believed that diversity was essential for growth. But in a matter of years, Blackrock swiftly increased the scope of its product offerings in the market. It unveiled a number of financial products, all of which were built upon the foundation of the company's initial vision. At the time, Blackrock's mutual funds and other investment vehicles catered to both the retail and institutional markets. One of the most important turning points in the company's early history was the launch of Aladdin, the proprietary risk management platform. This system provided a single, cohesive view of Blackrock's entire portfolio, a first for the market, and it quickly drew in clients who were interested in both exploring investment opportunities and learning more about the risks involved. By the end of 2004, Blackrock's portfolios had experienced exponential growth, making it the most talked-about firm on Wall Street. Their strategy of innovation and technology was supported by these dramatically increased assets under management, which also contributed to their growth in terms of trust. This is where the firm truly began to shine because of its transparency, which helped it gain trust at a time when the global financial crisis of 2008 destroyed nearly $2 trillion. The crisis put every financial institution on the planet's agility and resilience to the test. With its strong risk management system and Aladdin's analytical prowess, Blackrock emerged as a beacon in a sea of darkness, able to counsel government agencies and financial institutions on how to handle troubled assets. Blackrock emerged from the experience as a reliable risk manager and a strong advisor. With this solidified position in the global financial ecosystem, Blackrock embarked on an acquisition drive in 2009, first targeting Barclays global investors. Blackrock was especially keen to include the exchange-traded fund platform for Barclays iShares. The $13.5 billion deal was revolutionary in every sense of the word. Not only did it propel Blackrock to the top of the global asset management industry, but it also made it the largest asset manager globally and the market leader for the rapidly expanding ETF market. In the wake of the 2008 financial crisis, Blackrock increased its focus on sustainability and technology in the investment industry. Aladdin served as the foundation for the firm's expansion of its digital investing platforms, which ultimately turned it into a vital resource for investors looking for risk management and comprehensive portfolio solutions. Blackrock created new financial products with social, environmental, and governance criteria in mind because the demand for responsible investing was rising. Although many investors were still deeply hurt by the events of 2008, their growing desire for sustainability fueled Blackrock's growth. Today, Blackrock oversees billions of dollars in assets minus $10 trillion to be exact, and enjoys an almost invincible position in the market. The firm serves global governments, enterprises, and institutional investors. Its portfolio is as large as its managed assets. It provides cash management services for stocks, fixed income securities, and other investments. It is simple to see why the company's influence is felt throughout the market when you consider alternative investment strategies, real estate, and Aladdin's status as an industry standard for risk and operational management. However, as is typical with businesses operating in the financial markets, there are still a number of opportunities and difficulties to be resolved. Geopolitical tensions exist right now. The market is still impacted by general volatility stemming from the COVID-19 pandemic. In order to respond to these, agile solutions and creative tactics are needed. Blackrock, because of its size, is at a crossroads where it can influence corporate behavior, the broader dialogue of sustainability, and the direction of global investment more than ever before. BlackRock's actions will resonate across investment communities and markets at large because the firm's financial success and societal well-being are keys to the future. BlackRock has taken a proactive role in addressing the global issues facing the financial markets. It has a laser focus on specifically corporate governance and climate change. While constantly adapting to the markets and times, the BlackRock of today steadfastly upholds the original goal of Lawrence Larry Fink: remain the cornerstone of the company's success. It is with this understanding that the company handles market turbulence, regulatory scrutiny, and necessary sustainable expansion. Above all, BlackRock's vision is to achieve financial success while making a meaningful impact on society. As we come to the end of our deep dive into how Larry Fink built BlackRock into the world's biggest investment company, it's clear that his journey is nothing short of extraordinary. From its humble beginnings in 1988, BlackRock has grown to manage over $10 trillion in assets, influencing markets and economies globally. This success is largely attributed to Fink's visionary leadership, his focus on risk management, and his commitment to leveraging technology and data analytics to stay ahead of the curve. One of the pivotal moments in BlackRock's ascent was the development of Aladdin, its risk management system. This sophisticated platform allowed BlackRock to offer unparalleled insights and services to its clients, setting it apart from competitors. Fink's emphasis on transparency and fiduciary duty further solidified the firm's reputation, attracting a diverse clientele ranging from individual investors to massive institutional entities. Moreover, Fink's strategic acquisitions played a crucial role in BlackRock's expansion. The acquisition of Merrill Lynch Investment Management in 2006 and Barclays Global Investors in 2009 were game changers, significantly boosting BlackRock's assets and capabilities. These moves were not just about increasing size. They were about enhancing the firm's ability to offer comprehensive and innovative financial solutions. Larry Fink's leadership style, characterized by a blend of boldness and prudence, has been instrumental in navigating BlackRock through various financial crises, including the 2008 recession and the recent economic disruptions caused by the global pandemic. His forward-thinking approach, particularly his focus on sustainable investing, has also positioned BlackRock as a leader in advocating for environmental, social, and governance (ESG) criteria in investment decisions. Fink's annual letters to CEOs, urging them to consider long-term sustainability and corporate responsibility, have had a profound impact on the investment community and beyond. These letters underscore his belief that companies committed to addressing social and environmental issues are better poised for long-term success, reflecting a broader shift in the investment landscape towards responsible and impactful investing. As we reflect on Larry Fink's remarkable journey with BlackRock, it's evident that his blend of strategic acumen, innovative mindset, and ethical leadership has not only built the world's largest investment firm, but also shaped the future of investing. Thank you for joining us on this insightful exploration of Larry Fink and BlackRock. If you found this video valuable, please give it a thumbs up, share it with your friends, and don't forget to subscribe to our channel, Investing Tutorial, for more in-depth analyses and tutorials on the world of investing. Your support helps us continue to bring you the best content on finance and investment strategies. See you in the next video.